Hello, everyone. Welcome to Kryptonize. Joining me is the infamous or famous or whatever. His name is Key, and we're going to talk about funding in this blockchain environment today. Big bear market for a lot of reasons. We all know what's happened in 2022, hoping it's not going to be repeated in 2023. So let's jump right into that. But before we do, I want, Key, would you introduce yourself briefly and then we'll get into this current environment that we're in?
Sure thing. So I joined the space in 2013 in the early days, and from the time I came in, I've been looking at various business models and those that are revenue positive or those that are growing the user base and increasing its value and all the different kinds. In 2018, I set up my fund and also started various investments. And during the same time, we started Forward Protocol, which is an infrastructure in the blockchain space. But all along, since 2018, the biggest part of our ecosystem has been our incubator, Key Difference Media. So we have been there, done that throughout those investment cycles in multiple bull and bear markets. So very excited to be here.
All right. Well, 2013, I mean, you're a veteran. I mean, I can remember 2013 and I was poo-pooing blockchain and Bitcoin and I was the biggest naysayer, and it wasn't until Ethereum came around that I said, okay, I get it. I understand what's going on here. So it took me a little bit longer than most people, but I finally came around.
I think for me, when I entered the whole world of blockchain, it happened from a different angle. It was from businesses who are only looking at using blockchain for its benefit of transparency and to create an environment which is fair for everyone and using it as a payment. So there was no speculative part involved there. They were actually using it for business purpose and they were not raising any money. So it was an easier reasoning for me to make sense of it. And then the philosophy of blockchain kind of took off from there.
Yeah. And speaking of fundraising and raising funds, what does the current environment look like right now? I mean, it's early 2023. We just came off a really bad year for crypto. Let's just be honest. Where are we now?
Right now, most of the projects are having a struggle for their runway. They are not able to raise funds. They're stuck. Many of the fundraising that's happening, it's usually Series B kinds, like 50, 100, 200 million Series B, like a follow-on investment for the funds. And most of the money in the crypto space has been coming from retail and smaller VCs who are pretty much who earned a lot of money in the previous years, and that's many unsophisticated funds who are not really able to understand the technology and invest, but they invest along with group of others. So that unsophisticated VCs are mostly scared and they're concerned. But those that are on the sophisticated side who have been doing the VC as a business for many years, they are still into it, but they're more cautious. The business model becomes a key question, which is very good. Right now, the focus is shifting towards businesses who have the strong fundamentals, like a Web2 business, who is having the Web3 component that strengthens and future-proofs them, or a Web3 native company who is absolutely good at what they're doing, which is very specific, taking a technology to the next level. So there are these two areas of focus that's playing good. And of course, game studios and all of that. But it's all coming back to businesses that can prove their revenues, business that can show numbers, show a bottom line, not only showing a top line increase, but actual real profitability to sustain without further rounds of investment. So the industry is on the other extreme, I would say. From some of my conversations I had with people, the investors' expectations right now, to some extent, are not reasonable. They were over liberal, and right now they are way strict that nobody is going to really get funded and pass through them. So it's going to take another few months, and then they would come somewhere in let's say 30-40% back from where they are to a point where it becomes reasonable for businesses to raise funds and for valuations to not be ridiculously low, which is what it is in many instances right now. So we are in an adjustment period, I would say.
Wow. I mean, that's a very good summary. It kind of matches what I've been thinking. I haven't gone out like you have and taken the pulse. But one thing I will say is you caught onto a few things I've been proselytizing for a long time. That is, show value in your blockchain or crypto project, how are you going to raise cash? How are you going to keep cash flow going? How are you going to create value for the community that's monetized or you're able to monetize it? It's back to fundamentals. The fundamentals have never really left. We just had a bunch of people seeing a quick buck come in with these utility tokens that had pyramid type qualities to them, maybe not intentional, but that had showed no promise for any kind of return except for a quick buck to the early investors. And I think, and I hope those days are gone, that if you're introducing a project, it's either an infrastructure blockchain project like Ethereum that's, you can build on top of and you're providing all the tools to make everything happen, including payments, what have you, or it's what I'm really into, which is tokenization of assets or cash flow or debt instruments, something that you could say, oh, this NFT applies to this real estate project. We just had a guest on earlier on that. So I could say, yeah, it's tied to a real estate project that's producing real income and could be sold as a real asset for real money. That's the other set, I think, of crypto projects that we're going to see that are really game changing. Something I call NFT and tokenization 2.0, for lack of a better word. I'm not a big fan of Web3, whatever that means. So, but this next generation that you could show value, kind of like stocks, bonds, whatever, REITs, that VCs can say, okay, I can see how this is going to make money, and I can see how my investment is the risk on it is mitigated. What are your thoughts on that?
I think that kind of changes the market here because asset tokenization, the category that you're talking about, is projected to be around $18 trillion in value in the blockchain space. But then the question is that a blockchain business? It's using blockchain as a technology, but it's not a blockchain business. It's great that it's using the technology, but it's very hard for a blockchain VC to see that as a sector. If you go and present a mining project of probably mining some metal, a mining company can invest in there, understanding that they're using blockchain as a technology. That is more likely to happen than a crypto tech company, a tech fund investing in something that they have no clue what it is about, right? So we can see those complex situations coming up because these companies do not have the infrastructure to do a due diligence to understand that business model in the first place. And the asset tokenization space is very different because even a normal Web2 company who is involved in some form of tokenizing an asset or digitalizing an asset, they don't receive investments from a tech company either. It's coming from either their parent companies or it's coming from some traditional investors because it's like saying I have a database, I'm using MySQL database, and just because of that, I should be receiving tech investments from a tech VC. That's very unlikely. It's a technology that we are using, and that's what blockchain is created for. That's on one side. But on the other side, I think it is important to understand that there will be two types of businesses coming up. One is those that can prove its revenue, those that can make it fundamentally stand strong as a traditional business, as businesses existed for hundreds and thousands of years. But there will also be businesses like the ones that we have in the tech space right now, social medias or sites like Quora and many others, who many of them have not even figured their complete business model. They are not viable. If you pull the investment carpet out of the Web2 existing tech startups, most of them will struggle to survive for upcoming years. Especially if you did the same thing 5 years before, they would all be wiped off as well. So there will be that breed of innovation. Even AI innovations are the same way. Biotech innovations are the same way. They are not going to be revenue positive, but they are growing an asset. They're growing an innovation. But then that is going to be like 3% of the businesses. The problem happens when you use that excuse of those that fit the 3% and then try to sell 300 million tokens, which makes no sense. So it's the balance. It is in the due diligence. It's in the right categorization that makes a quite lot of difference in what we're looking at here.
Wow. I mean, great explanation. You're really in tune with this industry. So let me ask you this. I'm watching this show. I want to start a real blockchain business, not what I describe, which are security tokens using blockchain. You're absolutely right. The only way I see a VC investing in something like that is if you are the NFT infrastructure provider that's giving it to and creating the blockchain for these real estate projects or any asset type project. You're absolutely right. But getting back to my question, if I'm an entrepreneur watching this, what blockchain companies or crypto companies would VCs fund in this environment that you could come up with? Or is it just like total standstill until the market has more clarity?
I think right now, at least for the next 15 days to 45 days, it could be in a bit of a standstill. Uh, right now, VCs are hunting for assets which are of good bargain, those that are really, really down. But then when the parent assets like the core assets like Bitcoin and Ethereum, if they are 70% down, then if you're looking at any other assets, you're looking at a 90% discount, 95% discount, right? So most of the funds, many of them are at this point sticking with the main ones. They know they'll survive the next 1, 2, 3 years or more. They are in here for, they're able to manage this upcoming 2013, 2023's macroeconomics, because the macro is no joke at this point. What is going to happen to the crypto space? Nobody knows the answer because it directly correlates to what happens with the regulations and the rest of the world, the way it's moving, and with the wars and whatnot. So when you do not have that clarity, it is going to be more important to look at those that have users and revenue. They don't have to have a necessary innovation of technology, because when we're looking at blockchain and how some business is using it, that almost shows me a reminder of what happened with the Uber and Airbnbs. They had some technical ability. It's a marketplace. They didn't reinvent the wheel. They didn't create the next version of database type, or they didn't create a new language. All they did was put up a marketplace and they brought two parties together to run something in a different way. It does not require millions of dollars of coding to create it. And the way things progress, like if you want to create a Web2 company, you can use a drag and drop builder. You can use WordPress. You can use one of the existing templates and have your own marketplace up and running in the next few hours. By tomorrow morning, you would be running with your own website that does one of those things. Of course, it's not the perfect one. It's not the best one, but you have a prototype. That same thing is possible in the blockchain space right now. If a company comes in and is able to use some existing tech to come up with something in the next week or 1 month or whatever the case is, they're not budgeting few $1,000,000, but tens of thousands of dollars, and have something live. They have users, contracts, businesses, or ability to drive users and revenue to this. They will easily surpass and they'll start making more sense to investors because they can see the interest in the space. There are bottlenecks, there are challenges, there's no doubt around it. People cannot, not everyone can still use it. And if you make it easy for everyone to use it, there are technical challenges that come with it. And that is a space, or that is something that the blockchain industry is navigating. It is the growth of the technology. It kind of reminds me, everything into blockchain in Web3 reminds me of the .com era. How it started, how expensive it was to create Web2 businesses, creating a website costing $10,000-$20,000 to doing it in 10 clicks. That is a transition we are going to take. And it is not going to be jumping right off the bat. It's going to be a modular transition. So businesses will start creating products that can be bought by someone by a subscription fee. Maybe I would pay $20 a month to probably have one function of my business on blockchain. I will probably my CRM, then my one of the other systems of my payment processing, automatic accounting of my all my expenditures. So we'll start creating different service providers or companies that will enable an easier, user-friendly, but blockchain-powered way of providing the solutions to businesses in a larger scale. They are focusing on one small solution, which can be used for hundreds and thousands of businesses. And then that revenue will sustain, and that takes it to the next level, because a business needs to take baby steps towards Web3. They're not going to jump right in. Unless they're a Web3 native, they're going to take steps, and we need to enable those steps.
Wow. Again, I hope you're putting this content out somewhere besides here. It's really good stuff. We're at the end of our time. I'm definitely going to have you back on some other subjects. We should collaborate offline. Where can people find you so they can learn more?
You can find me on Twitter. My handle is Karnika Yashwant. Again, you can see it in the description. You can find me on LinkedIn with my full name, Karnika E. Yashwant as well. Again, I'm on Instagram and any other channels that you need as well. I'm pretty much everywhere. So feel free to search for me. Just a Google search of my name would give you all the links, but description will help you as well.
Yes, the description below is where you're going to find it. You can search if you want, but why? What are you going to look into the description? All right, with that, you're in Dubai, which we forgot to mention.
Yes.
And real quickly, why Dubai?
Okay, so I was looking at a place where I can meet the crypto community, be very close to the action, and at the same time have an amazing lifestyle. Like we had an amazing New Year a couple of days back. It was the best experience, and I think Dubai offers that excellent place. Governments who are friendly to work with, who are appreciating innovation, amazing lifestyle, and everything that you need, except for a bit of a compromise on the nature. It's a perfect place to meet community of crypto members every day. You can literally go out to events, any day meetups, and speak with people, share knowledge, and etc. It's an amazing place to be.
All right. Well, I've been to Dubai many times, but this was let's say, big crypto focus there. So I look forward to coming back, meeting you, and a few other people that I've been dying to meet over there. And I'll probably do some podcasts from there. So with that, thank you, Key. I really appreciate it. Hello, Kryptonite fans. I've got a special token that I'm recommending for you. You've been following this show. We don't play any games. We'll tell you what tokens we like, what we don't. We have guests that come on and try to convince us. And you know the drill. But this one's a sure winner. And that is Tetragar.